and welcome to this tutorial brought to you by To The Tick, and today's topic is the bear flag. Technical analysis and trader experience have put flags as a price pattern at the top of the favorites list in a group known as trend continuation. For traders, this means we get to watch the flag formation, the whole pattern unfold, and then have an opportunity to take a trade after and possibly profit. How cool is that? So let's get started, and this image represents a bear flag price pattern. It's important to understand that a price pattern has two parts. It is considered bullish or bearish defined by the pole direction, and the pole establishes part one. You'll notice that the base of the pole here is at the top, the tip of the pole at the bottom, therefore the tip is pointing down. That means it is in a bearish definition. The rectangle itself is part two, and you'll notice that as a rectangle, parallel or near parallel lines, it has no directional value whatsoever. It's neutral unless it's attached to the pole, and that's why it's a two-part price pattern. So in other words, there is no pattern without the pole, and therefore the only rule about trading a bear flag and looking for a trend continuation pattern is that every flag must have a pole. Without a pole, don't be looking for it. Okay, so who needs to understand this and why? How do we know when we can trade it? Well, basically, everybody's going to see lots of flags. They're found in bullish and bearish markets. They're found in all different instruments, time frames, price ranges, whatever you want to trade. And the best news is that they happen often. They tend to be very reliable, and they're really quite easy to see once we learn what they look like and we understand their characteristics. So today we're going to focus entirely on the bear flag, as it may lead into a continuation of a bearish trending move. So instead of looking at a perfect image, we're going to watch the action as it would as a trader and watch it bar by bar unfold. And the first thing that we have to understand is, where is our reference point? Our reference point up here is the bears continuing to come back and smash on this support line, smash, 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 and yet they haven't gotten enough yet to get through it. So that is the first order of business. We need to see them get enough impulsive, thrusting, strong action to finally push through there, both volume and price, and then we get to watch the pole getting created. So again, we've watched it form. The base is coming from your breakdown, and the tip or swing low of price is where the tip of your pole is going to be. So now we have part one. The deeper, stronger, faster, and harder this pole creation, that action that creates this pole, the better. Want it in price and volume, and you'll notice that it's got a tilt to it. It's always going to have a tilt towards price. So we look for our first bar or two that offers us a bounce or a retrace back up against that move, and then we watch the pullback again, and now we've established a couple of points, both swing high and swing low, and we can now use that measurement and draw ourselves some immediate definitions of both support on the bottom and resistance on the top. And we're going to bring that little perfect image, which is all about right angles, and we're going to say, okay, first of all, the base is done, the tip is done, the pole is created. We can see it now. So what we want to focus on next is the part in the middle, part two, the rectangular or parallel structure. Now, part two is all about, in a trend continuation pattern, it's considered a consolidation period. Or let's pause and take a breather. We expended an awful lot of energy to get that big old breakdown. We need to take a pause. Now, the shape of the rectangle, you'll notice the shape that we had at that perfect right angle is not what we have with ours that we drew that's slightly tilted. Well, the shape isn't really important. There are nuances to what the flag shape will be. The point is, does it maintain the structure? The structure's definition is parallel or near parallel, which means more or less equal efforts in price on each swing. You're getting an upper resistance and a lower support, and you're looking for those clear parameters. Now, the tilting aspect of the flag can be looked at as a nuance. So we do like the tilt in a bearish flag. We like that tilt to be against that bearish move while we're watching the price action in a range-bound situation. And it could also be tilted this way. It could also be tilted downwards. The point is each one of those nuances will happen. The majority of the best looking ones will have this tilt where it goes against that move. Okay? But it's only fair that you realize that it can be tilted in different ways. Again, structure, parallel or near equals a flag. As we watch this price continue to bounce around inside this range-bound scenario, it's important that you realize one of the benefits of trading a price pattern is that we get to establish some objectives based on the pattern itself about what might be coming next. So our objectives inside a bearish flag is for us to be able to take what's called a measured move, and we're going to measure the length of our pole. So here are the measurements I'm going to use, and I'm looking for this pattern to be such a great signal for a trend continuation that I'm going to duplicate my expectation out of what happened the first time. I want to see it again. And we're going to get to anticipate this, and what we need now is a whole brand new surge in volume and price the same way we got it the first time. We need to confirm that the bears are solidly in control again after this little breather when we're going to be able to do it with volume and or our price not being able to hold anymore. So we're going to anticipate it, and we're going to watch it as it unfolds. So again, bouncing around inside our support and resistance, finally getting the juice to break through. Does it confirm? And if it does, you're looking at the bears running again, charging and stomping down that hill again. And again, our target is to duplicate the pole. Now, from the standpoint of aggressive versus conservative traders, classic technical analysis says wait for the breakdown line. Wait for the break on the support line before you initiate a trade. More aggressive traders have two other options. You can continue to keep trying to take the short on each effort on that resistance line. The recommendation is at least wait for a couple of points to be made, which means a swing or two before you start trying that. And you can be looking for your shorts way up high like that. The other option is wait for it to not be able to get back to that resistance line. Fails to do that, you can be looking here. Quite often, the number is going to be something that's about a 50-50 of your spread here between support and resistance. So that's another aggressive option and ahead of the usual way of doing it, and at the same time a little less aggressive than trying to poke on each one of those shorts on that line. The definition of confirmation will be trader's choice, and I always offer chart examples, real world chart examples plus text for you to be able to look at some of those other nuances. We have established our part 1 pole creation has completed, part 2 flag or consolidation period has created, and now we're not looking at a price pattern anymore, we're looking at a bullish continuation pattern. Beautiful. Did everything we wanted it to do. In summation, let's look at it again, and let's understand that the bear flag, the most important aspect is understanding the bearish pole. It's the most important characteristic. All flags must have a pole, and the thrusting in volume and price that establishes the range as well as the volatility is what you're looking to be able to measure in this pole. More volatile, the better. Part 2, the consolidation or the flag part offers very little in the way of a pullback in price, and you want this to be brief, parallel lines or near parallel, and they're often tilted. Then we want a new breakdown both in volume and price with a big push and surge again from the bears, and then we want to be able to measure our move using that pole plus our breakdown value and add that our objective using our price pattern once again. I always offer live chart examples and we will have text. This is an example of a real pretty bear flag here. Again, it had taken a big rush in price and a nice little squeeze, little triangles up there in the top, got the squeeze, got that breakdown, and we're looking for that breakdown, the pole, to establish the flag and then break again. So again, you're watching your volume, you're watching the price action, and you're looking for the structure. This is a second example, and again, this is another reason why I'll show it to you, is because quite often, this is actually a different market, a different instrument, but quite often these patterns come in back to back. When you get these common continuation trades, they come in back to back. This is a real pretty one, and again, you had a little flag and another little flag, and they just kept coming with it. And I'll tell you, the pole measurements are all exactly equal when you look at these charts. Pay attention to your volume and what was happening. I always try to offer you a few little tidbits there of information. And again, come over to our website. We encourage you to visit us at tothetick.com/edu. This has been your tutorial on the bearish flags. Please come and subscribe and join us.